How to use a pension plan for a massive tax deduction. Want to know how the wealthy slash their taxes with massive pension plan deductions? Hi, I'm Dave Horwedel, CEO of Torchlight Tax. If you're a high-income business owner, there's a powerful tax strategy you may not know about, the defined benefit pension plan. Unlike a 401k or SEP IRA, which limit contributions to the tens of thousands, a defined benefit plan can allow you to contribute and deduct hundreds of thousands of dollars per year, depending on your age and income. Here's why the wealthy love it. The older you are, the more you can contribute. Someone in their 50s or 60s may be able to put away $200,000, $300,000, or even more annually. Every dollar contributed is a tax deduction, directly lowering taxable income. It creates a guaranteed retirement benefit for the owner while also covering employees. Contributions grow tax-deferred, meaning no annual tax drag as the balance compounds. This is one of the most powerful ways to reduce taxable income while building wealth for retirement. But it does require careful setup, ongoing actuarial calculations, and strict IRS compliance. I became familiar with this type of pension when I worked in the actuarial department of a firm that administered these sort of pension plans to high-income business owners. It remains a massive savings tool for high-income professionals, such as entrepreneurs, marketers, doctors, lawyers, and so on. For more advanced tax-saving strategies, check out our Business Owner Tax Savings playlist, including Asset Protection 2024 to 2025 and Introduction to Cost Segregation. See the links in the description below. For a free consultation on this or other advanced tax-saving strategies, contact Torchlight Tax at 877-758-7797 or info@torchlighttax.com. If you found this video helpful, please like it, share it, or subscribe to our YouTube channel.